Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Bullitt. I'm the aggressive growth stock strategist here at Zacks, and I got a top stock pick for the week. And then later on, Ethan Feller is going to come on and give you his great top stock pick for the week. Now, it's earnings season, and we've got a lot of things going on. We got trade talks, tariff talks, all that thing. The market is terrified over currencies. First it was the bond market, now it's currencies. But next week, we're going to have earnings from my top stock pick. And I think that the important thing is, 80% of companies, thereabouts, beat the number, but it's all about the guide. What do they see coming forward? I think I've got a little in on a stock that's going to probably guide higher. So let's take a look at it. It's Rigetti Computing. Rigetti Computing, and it's RGTI. It's one of these quantum computing names. It's a Zacks rank number 2. That's a buy. F for value, D for growth. So it's not going to make it on my aggressive growth screens. But these quantum names are going to be labeled internet software. They've had some moments in the sun recently, and then NVIDIA kind of crushed their hopes a while back. But recently, a competitor talked about how they could use quantum computing in the AI setting to help get things done even faster. We got a $2.7 billion market cap, and it's very liquid. And here is your projected earnings date. It is the 12th of May, so it's after the market close, AMC. All right, let's take a look at what we're talking about here. First, we're going to go through the numbers we always do, and are you beating the number? There's miss, a beat, a meet, and a meet. So not necessarily the best earnings history, but if you recall, at the end of last quarter, they talked about how they're going to have the product coming out in the first quarter in April, thereabouts, and we should start seeing some revenue in that quarter. So that'd be the second quarter. Then there's going to be an update in the summer, and then finally another update towards the end of the year. That's what they said. So let's see, has the market appreciated that? Well, here we can see estimates have moved up a penny. So for this quarter, up from a loss of 6 cents to a loss of 5 cents. Holding at 6 cents for next quarter, which I think could be your watershed quarter. For the full year there, we've gone from a loss of 24 cents to a loss of 20 cents. Next year, a loss of 19 to a loss of 17. So not necessarily gigantic moves in the earnings estimates. So I think that's going to really help our case here. So we're going to take a look at the growth, and that's what I key on. I see 34.5% growth this year, 14 million. Jumping up to 38 million, 160% growth next year. So that's big. But here's the idea that I'm really talking about. This quarter coming up, we're looking at 2.5 million in sales and then only 3 million in sales. So this current quarter, this is the first quarter, we're not really going to have a big number that they're going to report there. We kind of know that already. It's this number, I think, is where the guide happens. And I think we're going to get a big move higher there, and we get that, and things really change on this number as well. So that balloons up likely as well. So new product launched, in the April timeframe. We've seen a couple contracts come in. The U.S. Air Force was one for a $5 million contract that they were part of. So they're not getting all that $5 million, but they're there. They're making deals happen. It's gonna happen for Rigetti. All right, no earnings means no PE to lean on. So we look at price to book, and it's sky high at 21 times. That's because their assets slim. It's computing, it's compute power, so that sort of thing. Price to sales right now also sky high, but that number is going to shrink down as sales increase. Of course, margins are negative because they're not making any money. So we know that. But when we look at the chart, we can see that. Boy, there was that big move. We're at the bottom of the basement down here, and then all of a sudden we go up to $20 a share. NVIDIA wets the bed for us. Then we bounce up, bounce. But now I think it's time that we come back, and I can see this stock traveling north of $16 here if we get a good, solid guide higher for the next quarter. So that is the idea. The guidance for next quarter, it's Rigetti Computing. It's RGTI. And I have been Brian Bullitt, and I'm going to hand it off to my good buddy, Ethan Feller. He's got a semiconductor-related play for you, and it is a hot one. Take it away, Ethan.
Thank you, Brian, and hello, everybody. Welcome to this week's edition of Top Stock Picks of the Week. I'm Ethan Feller, stock strategist here at Zacks, and today I'm going to share with you a stock that has upward trending earnings revisions, a very reasonable valuation, a deep industry moat, and strong earnings growth forecasts. And that stock is Lam Research, ticker LRCX. So Lam Research is a leading equipment manufacturer and critical provider for the semiconductor industry. They are a global leader in etch and deposition tools, two critical steps in the semiconductor fabrication process. And these are some of the most complex and precision sensitive processes in chip manufacturing with measurements at the atomic level. Of course, the production of semiconductors is hilariously complex, but the basics of etching, it's the process of removing material from the surface of a silicon wafer. And this allows us to create intricate patterns that define the chip circuitry. And Lam is the industry leader in etching, and it has a 45% market share. And deposition is the opposite of etching. It involves adding ultra-thin layers of material to the wafer, and that puts insulating and conductive materials needed to build up layers on the chips. And for this process, Lam is has the second largest market share at 30%. And Lam's systems are deeply integrated to customer fabrication plants, also known as fabs. This is where they actually make the semiconductors. And Lam serves the world's largest foundries, including TSMC, Samsung, Micron, and Intel. Lam customizes all the tools for every fabrication that it works with. And the complexity of installing, integrating, maintaining these tools leads to long replacement cycles and sticky revenues. Lam has an installed base of over 80,000 tools globally, and this generates substantial recurring revenue from services, spare parts, and upgrades. And service revenue actually accounts for over 30% of sales. And this helps to stabilize cash flows, even during industry downturns, which is especially important for highly cyclical industry like semiconductors. The company is well known for their consistent research and development spending, which keeps them at the leading edge of technology and helps them to secure their strong competitive advantage. And as rigorous as and technical as the company is in developing and deploying its products and services, it's equally careful in its business management and strategy. And this is reflected in its very strong stock returns. In this chart, we can see the 10-year returns you can see this is Lam in blue. This is the semiconductors ETF in red. And then this is the NASDAQ 100 in purple. And you can see over the last 10 years, Lam has been almost a 10-bagger. At one point it was before the correction since late summer in the stock price. But that's over a 20% rate of annual return for Lam, which is considerably more than the industry average, which was about 18%, and the NASDAQ, which was much lower. So Lam has had very strong returns over these years. They've also done considerable share buybacks, which has helped to push the stock higher. They have reduced shares outstanding by 31% over the last 8 years. And this continues to demonstrate its strategic financial engineering, which really parallels its technological development. So we can see that the stock has pulled back recently from its highs. And the semiconductor industry and Lam kind of peaked out in summer last year. We all were following NVIDIA, and broadly the market, the semiconductor industry has been hit lower, and more so recently. Again, it was taken lower from the $90 to $60 level because of the geopolitical tensions caused by tariffs, and semiconductors are very much caught up in that. So, although it adds considerable uncertainty to the stock, a lot of the bad news has been priced in. And as I'll show you, this pullback, it's down from 110 to 60, so it was more than 50% pullback, or nearly 50% pullback. So it's much more compelling at the current level. I'm going to take a quick look at the earnings growth of the stock of the company. So these are the earnings per share. You can see they have trailing 12 months earnings of $3.62 per share, and then this dotted blue line is the stock's returns. If we zoom out some more, you can see this extremely steady growth in earnings. And, it's from about 50 cents to over $3.50 over the last 10 years, which is very, very good growth. And I think sometimes this gets lost on retail investors, but the stock's returns generally reflect their growth in earnings, which logically makes sense, but it's something we kind of overlook quickly. It's all the other, you have macro and innovations and stuff like that, but really growing earnings, growing profits are what makes a stock go higher. It's really as simple as that. And Lam is really good at that. Part of this is driven by their strong margins. You have gross profits on the Zacks page, but you can see it has a gross profit margin of 48%, and the net profit margins are 27% currently, and they've been above 20% over the last 7 years. So the company just has a strong business model, and good earnings are driven by large margins, which they maintain through their competitive advantages and steady business. So we'll take a look at the Zacks rank. Lam Research has the Zacks rank 2. It's got upward trending earnings revisions. Semiconductors are in the top 35% of the industry rank, which is a recent improvement. If we dig into the earnings revisions trend, we can see the stock has a lot of coverage, and there's been only 2 downgrades for earnings over the last 2 months. We can see the current quarter has seen some pretty hefty revisions, and there's been revisions across the board. The current quarter has been revised higher by 22% in just the last 30 days. The last 60 days. And there's been steady revisions across the board. So it's another important driver of stock market returns, of the stock's returns. And another cool thing about Lam is that it has one of the best records of earnings beats that I can have seen. This is the last 5 years. You can see there's one earnings miss here, and it was just a 1% miss, surprise to the downside. We zoom out further, and there's another miss here in 2020, and then you got to go back all the way to 2011 and 2012. So we've got 4 earnings misses in the last 14 years. So it's a pretty impressive record of steady earnings. And it's also, as I mentioned, it's got a very reasonable valuation. You can see at 18.6 times forward earnings. And, for a company that is so deeply entrenched in the industry and has such a competitive advantage, if you can get a company like that for under 20 times earnings, it's a pretty good look. But even more compelling is that earnings are expected to grow at 17.7% annually over the next 3 to 5 years, which is a fantastic growth rate for a company like this. And so, as I mentioned, there are some risks to Lam, but I think a lot of the bad news has been priced in. Primarily, this geopolitical tension is through the Trump administration tariffs against global trading partners, but mostly China. Lam Research does about 30% of its sales in China, but again, all of that has now been priced in. So, although we keep getting reassurance from the administration and from the Treasury Secretary, and that we're moving forward on tariffs, it's not really clear, but the worst of the tariffs have basically been implemented as of now. So I think it's part of the reason why Lam has gotten so cheap and what makes it such a compelling investment. Thank you all for joining us today. I hope you found this presentation valuable. If you want more research like this, I definitely recommend subscribing to Zacks' channel. And if you want even more information, you should check out our most recent promo at zacks.com/promo. Thanks. Have a good day.